All right, no long intros, no fluff. Let's dive straight in. You're listening to Big Short Club, and today we're breaking down a classic tool.
Yeah.
It's one that can stop you from getting absolutely rinsed in the markets. On balance volume, the OBV.
Mate, calling it a classic is an understatement. This thing is like the OG of volume indicators.
Right.
I mean, it's on the CMT exam, but more importantly, it's your personal snitch for what the big dogs are doing behind the scenes. Forget the headlines. This tells you where the real money is moving.
A snitch. I knew you'd have a dodgy way of putting it. Go on then, break it down. What is this OBV thing? Explain it like I'm 5 and, a bit thick.
Easy. Look, forget the complicated formulas. OBV is bare simple. Every day, you look at a stock's closing price.
Okay.
If it closed higher than yesterday, you take the entire trading volume for that day and you add it to a running score.
Got it. Green day, points go up.
Exactly. And if the stock closes lower, a red day, you subtract that day's entire volume from the score. If the price is flat, you do nothing. The OBV line you see on your chart, that's just the score. It's a momentum gauge. Is the crowd rushing in or running for the exit?
So the key thing is it's all about the volume, not how much the price actually moved. The price could creep up by just a penny,
Yeah.
but if it did that on massive volume, the OBV line will shoot up.
Now you're getting it. That's the whole secret sauce. This fella, Joe Granville, he figured this out back in the 60s. He said volume precedes price. The big, explosive price moves, they don't come out of nowhere.
Right.
There's always a buildup of pressure first, and that pressure is volume. OBV is just a way to see it.
So it's about spotting the footprints of the so-called smart money, the hedge funds, the big institutions. They're the ones slinging around the kind of volume that actually moves the needle.
Totally.
While everyone else is hypnotized by the price zipping up and down, the OBV is basically tracking the whales.
That is the game. An institution wants to buy 1 million shares,
Right.
but they can't do it all at once or the price will skyrocket. So they do it sneakily, over weeks. On the chart, the price might look dead, just moving sideways. But if you're watching the OBV, you'll see it steadily climbing. The snitch is telling you someone with a very, very fat wallet is loading their boots.
And the flip side, that's the real money saver. The price of a stock is still climbing, hitting new highs.
Yeah.
Everyone on Twitter is getting giddy.
Yeah.
But the OBV line starts to go flat, or worse, it starts to drop. That's the alarm bell. It's showing you the big players are quietly selling their shares to all the muppets who are just piling in at the top.
That, my friend, is a bearish divergence. If you learn one thing today, learn this. The price makes a new high,
But
the OBV makes a lower high. It is screaming at you. This party is a fake. The rally is running on fumes.
I like to think of it like this. The price is the sound of the engine revving.
Okay.
But the OBV is the actual horsepower getting to the wheels. A bearish divergence is when you hear a Ferrari engine, but you look down and see it's got the wheels of a scooter. It ain't going much further.
That's brilliant. And bullish divergence is the opposite. The price is in the gutter, hitting new lows. The news is all doom and gloom.
Yep.
Everyone is panic selling. But you look at the OBV, and it's making a higher low. It's refusing to go down as far as the price. That tells you the selling pressure is drying up, the bears are knackered, and maybe, just maybe, the smart money is starting to buy the dip.
Let's make it real. Take a look at a chart of Starbucks, SBUX. From back in July a while ago, the price dipped, making a lower low than it did in June.
Right.
On the surface, that looks bearish, right? Sell, sell, sell. But the OBV told a different story. It made a higher low. It held strong. That was a textbook bullish divergence.
And what happened next, that's the beautiful part. The OBV line broke its own little resistance trend line first. It gave you the signal. Then about a week later, the price followed. It shot up over 30%. The volume was whispering the secret a week before the price started shouting.
That's why it's a leading indicator. It's not looking in the rearview mirror. It's giving you a glimpse of what's coming.
Exactly.
But and this is a big but, it is not a crystal ball.
Not even close. Now for the government health warning. Do not be an absolute donut and just trade off the OBV line.
Right.
It has flaws, and if you don't know them, you'll get burned. So what's the number one trap? The volume spike. Let's say a company drops a wild earnings report or some massive news hits.
Okay.
You get a single day with a completely insane amount of volume that one day can throw the OBV so far out of whack that the indicator becomes basically unreadable for weeks. It just messes up the entire scale.
It's like one massive rogue wave that just ruins the whole seascape. A smart trader has to see that and go, okay, that day was an anomaly.
Yes,
I'm going to ignore the OBV until the water settles.
precisely. And the other thing is, because it's a leading indicator, it will give you fakes. It'll signal a bullish divergence. You get all excited.
Oh, yeah.
And then the price just plummets even further. It predicts, it doesn't promise.
Which is why you use it as part of a toolkit. OBV is like your scout. It goes ahead and checks for danger, but you don't charge in until your main army, your price action analysis, confirms it. You wait for the price to actually break a trend line or for a moving average to confirm the new direction.
100%. OBV gives you the theory. The price gives you the trigger. A perfect combo is a price breakout. If a stock smashes through a key resistance level, you immediately glance down at the OBV. Did it also break its own resistance trend line? If yes, brilliant. That's a confirmed high-powered move. If the OBV is lagging behind, get suspicious. It could be a fake out, a classic bull trap designed to lure you in before pulling the rug.
So the final summary for the people at the back. OBV tracks volume flow. Green day, add the volume. Red day, subtract it. It's that simple.
Its primary mission is to be a snitch for what the big institutions are doing. Your number one weapon is divergence, when the price and OBV tell you two different stories.
Wow.
That's your golden ticket.
A rising price confirmed by a rising OBV means the trend is healthy. A bearish divergence, higher price, lower OBV, is a massive red flag.
Huge, telling you to think about taking profits.
And for the love of God, don't trust it blindly. Watch for those monster volume spikes that distort it, and always get a second opinion from your other charts and indicators.
Right.
It's a powerful tool, not a magic 8-ball.
Solid gold. All right, before we sign off, a quick shout out. Join our Big Short Club chat group. The link is right there in the description below. It's where the real action is. We're in there all day, sharing charts, having a laugh, and roasting dodgy trades. Hop in.
Don't be a stranger. Now, we're going to leave you with a question to mull over. We've been talking about how OBV was designed to track smart money versus dumb retail money.
Yeah.
But in today's market, with Reddit, Twitter, and huge armies of retail traders piling into meme stocks, is that distinction even valid anymore?
Think about it. When 1 million traders on r/Wall Street Bets coordinate to send a stock to the moon, is that volume smart or dumb? And more importantly, how does that collective power challenge a classic indicator like OBV?
Let that one marinate. We'll see you in the chat. Peace out.